Hey, what's going on, YouTube? I hope everyone had a nice weekend. It's been a long one. Let's start with crude. Here's a weekly chart. It's coming up on a previous low, so overnight, let's see if this can hang on or fall apart again and take another step down. Still looks pretty weak, and I believe the contracts are going to be all the countries and pension funds and everything else. I think the contracts are being due in March. So that's when the real story will begin on the failures. We'll see, but it's on a tether, and it might as well just fall apart again. It did have a nice run this morning. Thought it was going to retrace some more, but it just fell apart again. And you can see that on the daily, how it was trying to retrace, and it did retrace to its resistance line. You can see that resistance line, but going similar to there. So it hit it and backed off. Not a big pattern, but still. What I was looking for is to reach its previous low, upwards of 34. Way too weak, not enough gusto at all. So let's take a look at the long term. And the monthly candle is just straight down, and it's closing on its lows. We are definitely below the previous lows over here. So might as well just take another step down, see where it ends up. Like I said, the contracts are due in March, or will begin to be due in March. So we'll have to hang on for another month and see where all that's going to lead us. It's definitely going to be a long year, so got to brace now for it. The dollar, it's still in its little pattern. Thing is, it's getting tighter and tighter within those two bars. Like a corkscrew, it just kind of winds up, and sooner or later the price is going to have to pop in one direction or the other. I thought it was going to fall apart, but it gained some legs, and it ended up hitting the other half of the pattern. I did think it was going to fall apart after that, but it's just kind of hanging in there. We'll see. I thought it was going to break this previous low, and then its natural course of direction would have been down to the other half of this pattern, but it didn't do that. It kind of reversed direction and made a good go at the other side. Let's go to China. Looks like it's bouncing, it's putting in a double bottom, and it's got some legs this morning. So as it breaks in the previous lows, we'll see how far it goes. Here is the natural course of direction. I would say resistance is this gap line. So 13 is about 34.50. See if you're going to reach that line and back off. See how far the retracement goes. See if it's got any strength. It's definitely not looking good. I mean, if we look at the long term, I mean, it's just nasty. It's still hanging above support on the monthly. As it gapped down, it might need to cover this gap on the way up, so a retracement. I would, yeah, it's closing the gap is at 35. So we'll see how far it can go. And again, the support line is right around 3,000. So maybe even look for a downfall to 3,000 and maybe do a bounce after that. But that's quite a good gap to, not all gaps need to be filled, but they usually are. So I think the probability is we're going to see a retracement. I said to 34. That's not going to fill the gap on the monthly. So see where we end up. That chart might not even be correct. So this is where I said it would go here, and it did fill that gap on the way down. So maybe no gaps will need to be filled on that monthly chart, and it'll just continue down. But let's see how far we can retrace here. And again, it's 34.50, right at that gap. That's my resistance right there. You got two gaps at that point, 3,400, 34.50. Now here's the S&P monthly chart. And since we have 12 days to go and this monthly candle is not completed yet or confirmed, It is trading near its lows. It is trading below its support. It's in between emotional points on a chart. We're trading at 1872, and the emotional parts would be the natural resistance line from here is 1900. Now everyone's saying, this is it. This is the economic collapse, blah, blah, blah. The thing is, it is falling apart. It doesn't look good, but it's not confirmed yet until the monthly chart. For me, the monthly chart needs to be confirmed. Below support, below lines of support. These are all support, and it's on a tether when it comes to trading on a day-to-day basis. But you have to think, the only thing the Feds have to do is start printing money again. This thing will reverse. It'll close above support. It'll continue on for the next month or the next year until they stop printing again. They can do whatever they want to this thing. I just want everyone to realize that anything can happen. We have 12 days. This can close or go all the way up to its previous breaking point, make a nice reversal candle, and keep going. Just like it happened before. It fell apart, it gathered its legs, and then it came up again. That could happen again. This could be delayed for another year. I mean, anything could happen. That's all I'm saying. I am not confirmed on this downtrend until this monthly candle either closes below support or previous lows. So it's got to break previous lows, close below those previous lows, and then close below the support. And even then, I mean, you got to keep your stops short. That way you don't get caught in a whipsaw. And that's what I'm worried about. The Feds are going to find some way to print some money. This thing will turn around and just be one of the hugest whipsaws I've seen in a long time. Because over the weekend, everyone came out. This is the end. The clouds are gathering. Economic collapse is here. This is it. Blah, blah, blah. I'm not convinced yet. Yes, I know how bad it is. I am fully aware. And I hope this thing falls apart. But I'm just not going to jump on that wagon until the end of this month when this candle closes below support lines. It has to confirm. And the weekly, yes, it's looking bad. But on the same token, I need this weekly chart to close below previous lows, which it did here, but we still got a little support here, and then it's, bon voyage. But right now, I'm not going to go on the bandwagon with the rest of everybody else who are anticipating, which I want to just reiterate. The charts are telling the story. If the chart hasn't broken down yet, it hasn't confirmed its breakdown, then it hasn't broken down yet. We have to wait. So be patient. You know what? I'm sure it's going to break down. Everything's just horrible out there. But you can't think of it that way until it actually happens. Because the Feds, I mean, they have the power to print money. All they have to do is print, 200 billion bucks, and this thing's back to 2000, and no problem. A couple things: gold and silver. I really like it. They are consolidating still. They are looking good. That corkscrew effect. It's just getting tighter and tighter inside the pattern. Today was a good day for silver. I think gold was down, which was just a topsy-turvy for gold and silver. So silver was up and gold was down. But it is the start of the week. Maybe gold was just putting in its low for the week so that it can put in a good gain for the rest of the week. You never know. But we closed above 14 today. Over the weekend, we closed below 14. So it's really on the tether. Anything can happen again. This thing could fall apart. It could just take another leg down, which, I think we're all used to that. But as I've been talking about, I like that accumulation and then its pattern. And then hopefully we can stay within the pattern for a couple more weeks, gain some more momentum, and make a nice break to the upside. And then we can start working on the longer term charts. So hopefully by the end of the week, we can start moving above and into previous lows. Move above and up on these previous lows. So we'll see where we end up on silver. I do like that pattern. The daily and the weekly is shaping up as well. Now on gold, we kept talking about its daily breakout and then its consolidation above the support line. And right now it's trying to decide, obviously, the candle I put in today was an indecision. It's trying to decide up or down. The 8 is pinching. I'm very curious to see what happens tomorrow morning, as the 8 is pinching the 13, and sometimes that 8 will just bounce right off and just go, switch its course of action, just go straight up. That's what I'm looking for, as it pinches and squeezes really tight and then just bounces right off of the, because moving averages are lines of support and resistance, right? So as the 8 is pinching the 13, it's coming down to support on that 13. It pinches really hard and tight and just bounces. That's what I'm looking for. I'm looking for moves on the upside from here on out. Again, anything can happen. Anything can happen. But this is our final line of support. But I'd love to stay above the 34 on the daily. And then as we move forward, you can see how price has moved above the 13 and consolidated. And on just the opposite of the daily, on the weekly, the 8 is underneath the 13. And hopefully we can get this band a little bit higher and start moving into previous lows. As price crosses the 13, it is moving into previous lows. So right now we are above the 13. Let's see if we can keep this thing going. The longer we stay in consolidation, the bigger the move. So keep an eye on that. I think that's it. I think we went through it all. China, it's rebounding a little bit, retracing. The dollar still in its pattern. I think we got on a weekly, it looks like a bearish flag. So anything could happen. Wait until it breaks previous highs or lows, and then you can decide whether it's bullish or bearish. But right now, this high flying pennant or bearish flag looks bearish to me. But like I said, it's still in that pattern. Anything could happen as momentum builds inside of it. Gold and silver, let's keep it moving. Watch for the last lines of support on the S&P. I think the Dow is already broken through, so but I think there's more importance on the S&P. And crude, it's in no man's land, well below previous lows. So that's it. That's all I got. Please share, like, and comment. Let me know what's going on out there, and thank you for watching.